Hello everyone, and welcome to another episode of the Daily Gwei Refuel, where I recap the latest news in the Ethereum ecosystem. I'm your host, Anthony Sassano, and today's the 25th of August, 2021. Alright everyone, let's get into it. So just a quick shout out here to David Hoffman from Bankless. They are launching a new podcast called Layer Zero, which is a show focusing on the people, not the tech, that make up the Ethereum community. So it's coming to your podcast feed every Tuesday at a Bankless here. The first episode was already aired with Dimitri Bruderin, Vitalik's dad. I'll be on one of the upcoming episodes. I'm really excited to record that there. But I think this is a really great idea, right? I talk a lot about how the Ethereum community, I guess like crypto in general and blockchains in general, are just like much more than the underlying tech. The community is really what makes up, essentially what makes this stuff important and kind of like long lasting and sustainable. So I'm really interested in listening to these. Like I listened to a bit of the Dimitri one. I haven't been able to finish it just yet, but it's just great to get like, I guess, the background story on a lot of these people that we follow every day. Like I follow Dimitri on Twitter. You know, I see a lot of his stuff that he talks about. He definitely talks about Vitalik a lot and posts things and nuggets and little nuggets of kind of like philosophy and stuff like that, which I always like to read. But it's not just him coming to this podcast. There's a bunch of other guests I'm sure David has lined up. So I'm just really looking forward to hearing all the different stories from all these different kinds of people and kind of like putting, more of a kind of, I guess, face to the name, because we all sit on Twitter, we all see these kind of like names pop up, and we have people with different avatars. Obviously, David's got his little CryptoPunk avatar here, but generally we just don't have a kind of enough context, I think, around the people that make up this ecosystem. And the awesome thing is that yes, there's like people that have their real names and everything up there, but there's also a lot of anonymous and pseudonymous people, and you can even interview them. They could either use voice changes if they want, or they don't have to have their camera on or anything, and we can still learn about these kinds of people with information that they be happy giving out without doxing themselves. But yeah, so I'm really looking forward to kind of like reading this, and you can kind of listening to this, and you can kind of read David's thread here for a bit more background on this and why he's doing it. I'll link this in the YouTube description for you. So the next Gitcoin Grants matching round has been announced. So this is round 11. It will begin at September 8th, 2021 at 3 p.m. UTC. So during this round, you'll be able to donate to all of your favorite projects and get your donations matched, which I think is going to be really cool. I think this will be the biggest round yet. I mentioned the Gitcoin bots kind of like profile picture NFT thing, I think a couple days ago on the Refuel. And so far, they've raised almost $1 million from that for public goods funding. So it's kind of like harnessing that dGen activity of NFTs for public goods. And I'm really, really happy to see that. So yeah, if you were wondering when the next grants round was, well, now we have a date, September 8th, 2021. I'm looking forward to donating to all my favorite projects, and I hope you are as well. So a really, really interesting thread from Cyrus Unisi here on Twitter today. And he starts off the thread by saying, quick investment thread. Probably one of the best investing abilities is to recognize trends ahead of time, find talent, etc., etc. Like if you knew BTC or ETH or punks were going to blow up, awesome, you made dollars, but that's really, really hard. I also think there's a second equally valuable and maybe not often talked about facet of investing, and that's the notion of feeling like you've missed the boat when you really, really haven't. And then he goes on to describe kind of like in more detail about what he means by this. But essentially, there's two parts here. I talk a lot about investing on the Refuel, even though none of what I say is investment advice. I still think it's good to give context around this. The two biggest kind of parts of investing is one, spotting trend of successful investors. Is one, spotting trends early on, and kind of actioning them, and also secondly, not kind of like dissuading from an investment or kind of like being turned off an investment because you think you've missed the boat, right? How many times have all of us kind of looked at something and been like, wow, it's already gone up 10x, I can't buy in now, it's already up too much, like I've already missed the boat, I'm just going to look for another opportunity. Well, let's put that in context. If you had did that with ETH, when ETH was $10 because it was $1, a year prior, or about maybe more less than a year prior. Oh no, it was about a year prior because it went to $10 in mid 2016, and you didn't buy in then. You were already like, oh, it's already gone like 10x, like I missed the boat. Well, no, you didn't miss the boat because the next year ETH went to $1,400, and then obviously it's at like over 3,000 now. So that's just like an obvious example of how missing the boat syndrome is really like damaging to you as an investor, because it makes you kind of like make these kind of decisions where you're not willing to put money into something just because it's already increased a lot, which is, it's counterintuitive, because at the end of the day, just because it's increased a lot already, And actually, let me take a step back here. The reason why it's counterintuitive is because if you're looking at an asset and you think, wow, this is a good investment, but then you think it's already gone up 10x, well, I mean, that's just a bit silly, right? Because if you think it's a good investment, then you think it's going to keep increasing in value. And the fact that it's already gone 10x is actually positive because it means more people have seen that the value is there and they're kind of like investing in it and there's interest in it. And this isn't just like true for ETH, this is true especially for NFTs and a lot of stuff going on there. Like I know a lot of people who missed out on buying a CryptoPunk, even just late last year or earlier this year, because they thought to themselves, like, how much higher can these things go? Well, I think they can go even higher from here. Like, there's just like a bunch of reasons why. I'm not going to get into that now. But those are kind of like the things that as an investor, or what makes a good investor, is that they think about these things and they try really hard not to let them kind of like affect themselves here, affect their investment decisions too much here. And, I replied to Cyrus here and I said, amazing thread. And I agree with everything you said, but I also said that I personally struggle with sizing my bets correctly, even though I can spot these trends well in advance due to spending every waking second in this ecosystem. And if you watch the Refuel all the time, you'll be spotting these trends alongside me because I cover everything that I basically kind of like come across. But essentially, this is the third part of being a good investor, is sizing correctly. And what I mean by this is, instead of putting like a small amount into an investment that you're really bullish on, you put a big amount into. For example, if you put like $10,000 into something and you make a 10x, right? You've made like $100,000, and you've made $90,000 profit, which is all well and good. No one's going to be complaining over that. But if you're like really bullish on it and you think it's actually like a pretty high chance it's going to go up in value, and you have the money available, well then you should size appropriately. So if you put in $100,000 instead of $10,000 into this investment, you will make, and it goes to $1 million, it goes 10x, you will make a profit of $900,000 instead of just $90,000. Now, this is obvious, it's just easy math and things like that. But generally, this is what I struggle with. Like a lot of the big wins that I've had, they've been, awesome. Like I've made like a big percentage kind of return on it, but I never sized it correctly. Like the only thing that I consider myself to have sized correctly is probably ETH. A lot of the other things, even the DeFi tokens that I bought early on and stuff like that, I have just been too conservative of an investor there, and I just haven't kind of like put in kind of like the right size. And the most recent example of this is actually with an NFT, Unisocks. So I ended up buying one pair of Unisocks late last year, or like September last year, after the Uni airdrop, because my thesis was, well, Uniswap is absolutely massive. The Uni airdrop is like game changing. So many people love Uniswap, and you have this kind of like NFT that's tied to the Uniswap ecosystem that a lot of people aren't aware of. And since then, Unisocks is worth $130,000 today, but I only bought one. So I think I bought it for $1,500. So I only put in $1,500 into something that I was actually really bullish on and I thought was going to go really far. So I should have put much more than that into it, right? I should have even put like just $10,000 or something into it. And I've made a considerable amount of return there, but in reality, I could have made a lot more money. And I'm sure a lot of you can relate to this, and kind of like you've made this probably mistake in the past. And these days, I still kind of like make this mistake from time to time. And just learning from it is obviously the thing that you want to do here. But at the end of the day, those are the three kind of things that can kind of like trip you up into like being a good investor. Spotting early trends, spotting trends early on, but not making the move. Not making the move because you think that it's already gone up a lot, like how much more can it go up? And also not sizing your bets correctly. So yeah, I just thought this was a really great thread from Cyrus highlighting all of that. And at the end of the day, even if you feel bad about this sort of stuff, you shouldn't. The right and the correct thing to do is, okay, maybe you can feel bad about it for a little bit and be like, oh, that was such a silly decision. But as long as you're learning from those mistakes, I think it's fine. I learned from the mistakes, and I'm sizing things, maybe not as big as I should be, but like, I'm increasing kind of the amount of money I put at risk there. But it's also all relative, right? If you have only got $10,000 to invest, well, then you're not just going to put it all on one thing. You're going to like diversify a little bit, probably have like a cash position for any opportunities and stuff like that. But generally, it should be a percentage thing. So if you find an investment that you're like super bullish on and you think it's going to be this absolutely massive thing, well, then maybe instead of putting 5% of your net worth into it, you put like 20% or something like that. I'm just saying random numbers here, but it should always be a percentage-based thing, not a dollar-based thing, because everyone has a different amount of money to invest. And, there's riskier ways to do it too. You can take on leverage by essentially borrowing funds against your kind of like ETH, for example. That's definitely riskier, and I wouldn't kind of like recommend doing that unless you knew what you were doing, of course. But I mean, this is why investing is so hard at the end of the day, because there's so many different things to consider. There's so many different like human biases that we have that stop us from being able to make good investment decisions. And one of them that I talk about a lot on the Refuel and in my newsletter is what's called recency bias, where is this kind of notion of putting more weight on recent events and kind of losing sight of the long-term picture. And within crypto, this is really easy to do, because if you're in crypto and you're kind of like on Twitter and like watching day to day, you may feel like that, weeks or months are passing when really it's just been days that have passed. And you may think that the narrative has changed underneath you, or you've missed something. The perfect example of this is each week now we seem to have a new flavor of farming opportunities on one of these other chains. And really, I mean, you might look at that and be like, oh my God, these Ethereum killers are actually getting traction. They're actually going to, maybe they present a threat to Ethereum. But like your recency bias is, 1 week worth of data, right? Where you've got like years and years worth of data on Ethereum, and like projecting this out long term and kind of sitting down and thinking through it properly, you kind of have a different view there as well. So yeah, the human biases that prevent us from being better investors are absolutely insane. And I recommend reading about them. You can just Google, human cognitive biases, and you'll be able to find like all of the conscious and unconscious ones. Unconscious ones are even more annoying because you don't even know that you're being affected by it, but we're all affected by it equally. And I think the best investors are the ones that can spot their biases and work around them and navigate around them in order to kind of like maximize their return. But yeah, as I said, none of that is investment advice. It's just general kind of like, I wouldn't say advice, but like general kind of like chatter about how to approach investments within crypto, especially, and how to not let things cloud your judgment at the end of the day. But yeah, I'll leave it at that. You can read this whole thread. It'll be linked in the YouTube description below. So Patrick McCorry put out an interesting thread about sidechains and rollups, where he says a few comments about sidechains and rollups. They are all independent blockchain networks with their own validator's execution environment. They may use an L1 to help lead an election. That is just a protocol transcript choice, e.g. is it internal or external to the network? And then he goes on to say, what matters is the bridge content on the L1 and how it secures the funds. Does it trust an external entity, or can it independently check itself? But it is all about bridges. The actual network itself doesn't matter. They are all new blockchain networks. I think I've talked about this on one of the AMAs before, but essentially layer 2s like and kind of like side chains, I mean, they have different security assumptions, different bridges, stuff like that, but they are both still new blockchains. Like a layer 2 is a new blockchain. It just inherits its security from Ethereum because it doesn't have its own kind of like validator set. It has its own things called sequences, which kind of like put the transactions together and produce the blocks and things like that. But its actual security is inherited from Ethereum. Now, that security comes from the bridge contract. Now, the bridge is like we're all probably used to these bridge contracts by now, where you send funds to a bridge and like say going to Polygon, you send it to this bridge and then you get your funds on Polygon. But really, those are just IOUs. The funds are actually stored on the contract on Ethereum. So even with these L2s, we send it to like the Optimism or Arbitrum bridge contract. And if anything, it goes wrong with that bridge, or if there's a bug there, then those funds can be taken out of there. And it doesn't matter what security guarantees you have on the layer 2 or whatever, the bridge is always kind of like that last line of defense. So that means that Ethereum is the last line of defense, and Ethereum is securing it because that's where the funds are technically stored. That's why we say that layer 2s inherit their security from layer 1 Ethereum. And there's a bunch of other things that go into this, but this is like a basic overview here. So this is why people kind of point out things like, the Polygon bridge having a 5 of 8 multi-sig, and if 5 of them colluded, they could withdraw all the funds. Technically true, right? But like obviously a low chance of that happening, but still technically true. There's a bunch of other bridges out there that have centralization vectors around them. I'm not sure of it, but Optimism's bridge may have an admin key or something function around it. All that sort of stuff there. And then, Patrick goes on to say it also matters like how the bridge kind of like can check itself. Is it external or internal? And kind of like, is it independent? So with a bridge on Ethereum that is fully trustless, then Ethereum is kind of like your checkpoint for that bridge and for things going back and forth there. And then, depending on how the L2 talks to it as well, or like the side chain is a whole nother kind of thing, I guess like kettle of fish around security and stuff like that. Because really the main difference between between sidechains and L2s is that a properly constructed L2, as I mentioned before, will inherit its security from Ethereum as long as the bridge is also secured by Ethereum and doesn't have any backdoors and stuff like that, where a central operator could stop the bridge and then essentially your assets are frozen or could be stolen or whatever. And then in the sidechain context, there's a major difference here where when you put your funds into a bridge and it goes to L2, the bridge is your last line of defense. Like if the L2 does something malicious or whatever, it doesn't matter. In this case, rollups, because you can go to the bridge and say, okay, well, I want my funds because your funds are stored in the bridge. You can kind of like get them out if the L2 is constructed correctly, like Optimistic or ZK rollup. Whereas with the side chain, when you bridge across, yes, your funds are in the bridge, but you're bridging across into the kind of like new sidechain network, which is basically another layer 1 that has its own validators that are responsible for the security of the network. And if the bridge doesn't have any kind of like, the bridge going to the sidechain doesn't have any way to kind of like pull out your funds or validate that you actually had funds on the kind of like sidechain, then you essentially lose those if the sidechain operator goes rogue, or they try to like there's a 51% attack or stuff like that happening there. So your security guarantees on a sidechain, other sidechains validators, your security guarantees in L2 is the Ethereum network. And that's why we say that the L2s are much more secure, because Ethereum is providing that security. So yeah, there's a little bit more tweets in here from Patrick about this. I suggest going and giving it a read, but it's always good to remember that the bridge is really what you should be looking at in these sorts of things more than anything, because an L2 can be obviously secured by Ethereum, but if the bridge has like an admin key on it, or it has like a way to be compromised on it, and it's not validated correctly or whatever, then it doesn't matter how good your L2 construction is, the bridge is like that kind of final defense there. So yeah, always good to keep that in mind. So a little bit of a tweet video here from Piers Kicks, who basically says, augmented reality meets art gallery. The wearable future is going to be incredibly cool. And you can see here a bunch of kind of like art on the floor and on the walls and things like that, where there's an augmented reality kind of like playing around with it. So obviously this has been recorded with a phone, but you could imagine things like wearing a Google Glass and being able to go into this augmented reality art gallery and kind of like the art just comes to life, so to speak. And obviously this plays into the whole metaverse thing and NFTs and kind of virtual reality. But I really do think that augmented reality is going to play an absolutely massive kind of like piece in the metaverse, in the kind of like NFT ecosystem, because you can imagine just going into the real world and having like, your NFT kind of like, I guess, follow you along, like you have a little NFT pet follow you along or something, or maybe imagine like your pudgy penguin following you along or something like that, and then other people that have the wearable glasses on can see that. I mean, there's a whole kind of like thing to unpack here with this sort of stuff. I'm not going to go into too much detail about it now, but we've really only scratched the surface of this sort of stuff, and this is going to get really, really crazy. But I just thought this was really cool. And if you're listening to the podcast, the video will be linked in the YouTube description, and you'll be able to kind of like watch it there. So Jimmy.eth put out a great tweet about NFTs today, where he said, NFTs are not like anything that has ever happened. Stop trying to make it all a bull or a bear. There are thousands of microeconomies and the money can shift from one to another in an instant. There are bear and bull markets at the same time. Something will always be in profit. So this got me thinking, when you kind of look at NFTs and kind of look past the speculation and the money and everything like that, at the heart of all of them are these communities, and feeling a part of this community is a big part of the value proposition of NFTs. And I've talked about before how, as NFTs get more expensive, people get priced out. So for example, people got priced out of punks. They started making other profile picture NFTs like Bored Ape Yacht Club, Pudgy Penguins. There's a bunch of others out there. And there's obviously diminishing returns as you go along, and each are worth less than the other. But it gave people an opportunity to be part of a newer community, and a community that they can actually buy into. Because the punk floor is what, $250,000? That is a very exclusive elite community that not many people are going to ever be able to kind of buy into. $250,000 is like what, 5 times the average wage in, or maybe even more than that in the US. I don't know what it is in the US, but that's a yearly wage sort of thing. So most people aren't going to be able to do that. But the Bored Apes are also quite expensive these days. The Pudgy Penguins too. So you always have kind of like these, I guess, like newer communities that spin up, and that's kind of what Jimmy's getting at here. There's like these thousands of different communities and microeconomies all kind of like coming together, minting NFTs or just doing really cool things together, creating new communities. And it's not really about bull or bear markets. It's just about the community. And sometimes Obviously, some NFTs will be pumping, sometimes other ones won't be. But really, I think that because of the fact that NFTs have like a much stronger community pool, they have like, I guess an image attached to them. It's very different to like, I guess like a DeFi token, for example, where if the token goes down in price, there's no kind of like image that's attached to it or whatever. There's obviously a community, but the communities are quite price sensitive. So if the token's gone down a lot in price, and a lot of the community will just disappear because they don't really care to stick around or whatever. But with like the NFT community, you can still have like, even if if punks were to like go down by 90%, yes, probably people will be less interested in them. But there's still going to be a lot of people who are part of the punks community that are going to be super active and sticking around and still be kind of like really excited to be part of it and still keep kind of doing really cool things. If you've ever been in the CryptoPunks Discord, you know what I mean. That's a very active Discord. Bull or bear market, doesn't matter. They're super active in there. So I just thought this was an interesting tweet from Jimmy here and how to frame that there. Speaking of CryptoPunks, Visa, I spoke about, the other day how they bought their punk. They set it as their profile picture as well now. So the Visa news account on Twitter has their CryptoPunk as their profile picture, which I guess is like next level because it's basically showing that, hey, this kind of like NFT, we're not just buying it as kind of like, we're not just buying it and kind of like stuffing it away in our treasury and never looking at it again. We're actually embracing it fully and putting it as our profile picture, which is just wild, right? When you really think about it, a publicly traded company as big as Visa making a CryptoPunk their profile picture on Twitter. Like, this is their public facing kind of brand, right? It's quite wild. And I thought that was just an interesting thing to point out there. So a couple more things on NFTs, and I'll stop boring you about NFTs. So bantg announced a $315 million NFT airdrop. So they've partnered with Project Galaxy and the best vendors out there to create a definitive hacker survival toolkit for aspiring shadowy supercoders. So if you ever deployed a contract, you can now claim one of these kind of like NFTs here. So you can kind of see shadowy supercoder NFT, shadowy coder NFT, and you're not just NFTs. You can also claim a bunch of perks from different tools or developer tools like Tenderly, Alchemy. There's that you can claim 50 GTC from Gitcoin DAO. So that's worth quite a lot. Quite a lot right now. That's about $400, I think. So you can claim a free $400 if you are eligible to do this, and there's a bunch of other things happening here. Unfortunately, I, across all of my addresses, apparently never deployed a contract at all, which is weird because sometimes when doing transactions, even if you're not a dev, you would deploy a contract. For example, when you interact with Maker Governance and vote on something in Maker Governance, I think it deploys a proxy contract for you, but I've never actually participated in Maker Governance because I've never actually held the MKR token. So yeah, a bit of a shooting myself in the foot there. But yeah, if you have kind of like deployed contracts and there's a bunch of other kind of like criteria here to get this, you can do this. But I think that beyond the NFTs, it's just really cool that they're basically giving developers all of this kind of stuff here. I mean, this has been happening in the Web2 world for quite a while, where you get access to like developer credits and kind of like free transactions and all that sort of stuff on here. But I just think it's really cool to bring this to crypto, and this is huge for a lot of developers. So definitely go check this out if you haven't yet. So an interesting tweet from takenstheorem here, where they said OpenSea is about to break into the top 1,000 list of websites in the known universe. And then they go through a list here of website rankings. Binance at number 155 actually surprised me a bit. But then you can see like the top 100, eBay's at number 39, Etsy it's number 70. But what I wanted to kind of point out here is that OpenSea is 1,069 as the rank here. Etsy's number 70, but OpenSea is already doing more volume than Etsy. Now, I think I've kind of mentioned on a refuel before that I think it's not really an apples to apples comparison between OpenSea and Etsy, but still, it's amazing that OpenSea is like ranked, so much lower than Etsy is, but he's doing kind of like similar volumes or like more volume there, which I thought was pretty cool. But I wrote a bit more about this in the Daily Gwei newsletter today about how crypto is just like silently climbing through the ranks, right? There's not really much noise in the real world about this. Maybe more so there is lately, but generally outside of crypto, there's not too much noise about this sort of stuff. But I think slowly but surely, crypto is just going to keep climbing these ranks, creeping up, getting into the top 100, and all these websites are just going to basically replace the existing kind of like top 100, or at least most of them will, and eventually we're going to get to a point where crypto like tools are so ubiquitous across the entire internet that we won't be referring to things as crypto or non-crypto anymore. We'll just be referring to them as one category, like we refer to the internet today. So yeah, I thought that was cool. But I wrote more about this in the Daily Gwei's newsletter today if you want to go check that out. So another kind of like NFT and ENS bought by another company. So Budweiser bought or paid 30 ETH for beer.eth, the ENS name, and they also kind of like minted an NFT from Rocket Factory, Tom Sachs Rocket Factory here. You can see in the picture they've got like an NFT, a Budweiser NFT on the left hand side here. But yeah, I wanted to focus on the fact that they bought an ENS. So this is another big company getting involved, and ENS names are actually NFTs as well, right? Like some of you will have already known that. But they paid a lot of money for beer.eth. They paid $100,000 to purchase that, obviously because someone was sitting on it already. That wasn't just going to be freely available, of course. But, this is just more and more of, I guess, the Web3 world meeting kind of like, not even the Web2 world. This is like outside of that completely. This is like the physical world stuff going on here. So I just thought that was really cool. And, as I mentioned in my tweet here, buying the ENS is such a Chad move because, it really is, right? This is going above and beyond just buying, minting an NFT or whatever. It's buying the ENS and making that kind of like your brand. And at the end of the day, as ENS becomes more kind of like ubiquitous and involved within the, I guess, wider internet, and we have like things like sign in with Ethereum, I guess, like kind of more adopted here. This is like a really, really rare domain name. Imagine owning beer.com. Like this is the kind of like beer.com of Ethereum, like being beer.eth here. So yeah, pretty good pickup from Budweiser, I would say. So yeah, congrats to them on the buy here. All right, so Lyra Finance, I've talked about them on the refuel before, but they're officially now live on Optimism's mainnet. So this is the third app to go fully live on Optimism's mainnet, and this is a native deployment as well. So this has never been deployed to layer 1 before. It's going straight to layer 2, and I've mentioned to you guys before that I think that this is going to be a trend going forward. There's no more really, deploying on layer 1 for most of these apps. It's just straight layer 2 deployment. So this is really, really cool to see. Just a refresher, Lyra is an options protocol. They definitely tap into synthetics, which is on Optimism as well because they spun out of synthetics. And you can basically go play around with it now on the Optimism network by going to app.lyra.finance. You can sign in, bridge your assets across, all that good stuff there. They've got a light and dark mode here and everything, which is really cool. And it's kind of like pretty basic right now because they just launched, but you can buy ETH calls right now, which essentially means you think the ETH price is going to go up, so you're buying a call on that, or you can buy a put, you think the ETH price is going to go down, so you can sell a put on that. Buy a put on that. So yeah, definitely go check this out, play around with it if you're into options. I know options is one of those more exotic DeFi products that a lot of people probably don't understand. I don't fully understand how they work and all the different kind of things that go into it, but still, I think this is just awesome that we've got something live on Optimism other than synthetics and Uniswap. And as I said, Optimism's whitelist is actually live for the public now, for every developer to kind of whitelist and get spun up within 2 weeks for their apps. So expect to see more and more apps go live on Optimism over the coming weeks. So Loopring announced that they're bringing NFTs to their Ethereum layer 2. So I think I mentioned this in yesterday's refuel, how they were teasing this, but essentially the TLDR is that Loopring ZK Rollup now supports NFT minting, trading, and transfers. Any NFT minted on L2 can also be withdrawn to L1. Both the ERC 1155 and ERC 721 NFT token standards are supported. L1 NFTs can be subdeposited to L2 as well, which is really, really cool. No restrictions. All L2 accounts can mint NFTs, and NFT support will be part of the next Loopring release, which is due for the end of August 2021. And Loopring is also exploring use cases and partnerships to help bring NFTs to the next level on Ethereum L2. I love this because we already have ZK Sync and Immutable X as layer 2's kind of like signaling like heavy support for NFTs, but now we have Loopring. And I think all of the L2s are going to obviously support NFTs here. But this is just great to see that they kind of like recognize the value here. And then they realize, hey, we need to support NFTs like ASAP because this sort of stuff is obviously very expensive on L1. It's funny because like OpenSea, since 1559 went live, has actually burned 2 times as much as Uniswap has burned in kind of like ETH, I think, last time I checked, or at least almost 2x as much. So obviously a lot of demand there, but there's a lot of people still being priced out, and I would love to see those people stay within the Ethereum ecosystem rather than bleed into some of these other kind of like ecosystems that offer the cheaper fees or whatever. I would love to see people kind of like go to L2 and experience Ethereum's L2 ecosystem and how the fees are cheap there for their NFTs. And OpenSea, I believe, is on Polygon already, their POS chain, and I think they're going to be deploying to Immutable X as well. So I'm looking forward to seeing those marketplaces live on L2 as well. So, final kind of announcement here. Euler, a new money market protocol, has announced that they have raised $8 million in a Series A led by Paradigm. Now, I have to disclose that I am a seed investor in Euler here, or Euler. I think it's Euler. Yeah, I think it's Euler. I always say Euler because that's kind of like how I read it here, but I think it's Euler. But yeah, this is kind of like a new, as I mentioned, a new money market protocol, and they basically detail kind of like exactly what they are here, and I'll just read it out. Euler is a capital-efficient, permissionless lending protocol that helps users to earn interest on their crypto assets or hedge against volatile markets without the need for a trusted third party. Now, what sets Euler apart is that it features a number of innovations not seen before in DeFi, including permissionless lending markets. Now, I think there are a couple of other smaller protocols right now, money market protocols that are doing permissionless lending markets. I can't remember the names off the top of my head, but there are a couple of other ones out there doing that. But then Euler goes on to say reactive interest rates, protected collateral, MEV resistant liquidations, multi-collateral stability pools, sub-accounts, risk-adjusted loans, and much more. You can visit the Euler website to check it out as well if you'd like. Here, I really like their branding and everything. On their website here, it's really cool. It's really nicely done. And I'm not just saying that because I'm an investor. I'm an investor because I liked what they were building, and the team is really cool. But yeah, the round, I mean, as I said, was led by Paradigm, and there's a bunch of other investors that participated, but besides the angels here, obviously, I'm an angel investor. Ryan and David from Bankless as well, and some familiar names like Kane from Synthetics and Hazu and things like that. But also there was Limniscap. Joined the round, and they were their lead seed investor for Euler, and then a bunch of other kind of like investors here as well. So yeah, I mean, this isn't live yet. They're planning to go live end of the year. They're going to have a token. You can see here, native governance token, EUL, will begin being distributed to lenders and borrowers on the protocol from day one of launch. So they're going to be a day one kind of launch token here. And as I said, like they're bringing a lot of unique features to the money markets kind of, I guess, space, especially around, for me, what caught me the most was the permissionless lending markets. Now, the reason why I like this is because it's really hard to do, right? Firstly, because when you think about kind of like money markets and the assets that are supported on something like Aave or Compound, the reason why they don't support everything is because of liquidity. That's a big reason. Like if you don't have liquidity to process a liquidation, then or if like they're very low kind of liquidity coins where the price can move around really quickly, it's kind of hard to kind of get people be able to borrow against that and to use it as collateral. But with with what Euler's approach is doing, and they haven't really detailed it here, but I've kind of seen it. They're taking like a unique approach here, which I'm sure they'll detail, leading up to their launch, to kind of like enable this, and that's what really caught my eye about them. But as I said, they've also got a number of other features, including reactive interest rates. So basically dynamic, reactive interest rates that kind of like need to be in existence for these permissionless lending markets to work, because you need to be able to kind of, I guess, make sure that it's very manipulation resistant too, because as I said, a lot of these low liquidity coins, if they get listed on Euler and they become like a collateral type, you need to kind of be able to make sure that the interest rates can react to very, very quick movements in their price. And you also need to have things like protected collateral in place to make sure that people kind of like don't just get like absolutely wrecked, right, and things like that. And then MEV resistant liquidations, that's obviously a big talking point, MEV and resisting MEV and stuff like that, especially within the liquidation space. Something that I guess doesn't get much attention. The MEV that gets attention is in the DEX space, but liquidations is definitely a big part there as well. Multi-collateral stability pools, sub accounts, and risk adjusted loans, and much more as those final features there. But anyway, I'm gonna stop shilling here. I just thought that was really cool to see that they finally announced their Series A and kind of like came out of stealth a little bit here. As I said, they'll be launching their kind of product towards the end of the year, I believe, and then the token will go live with the product as well. So definitely, keep your eyes peeled for that. But I think that is it for today, everyone. So thank you again for listening and watching. Be sure to subscribe to the channel if you haven't yet. Give that video a thumbs up, subscribe to the newsletter, join the Discord channel, and I'll catch you all tomorrow. Thanks, everyone.